The market saw a pretty decent bounce during Friday's trading session with a SPY up 2.07%, closing at 562.81. Friday's trading session also saw a close above the previous 3 trading sessions closes, so a decent move. We're also above the whole moving average on the daily candlestick chart. The whole moving average is 554.30, so we have not seen a close above that daily whole moving average basically since the start of the decline back on February 19th. I also think it's significant that the largest negative gamma exposure concentration is at the 550 strike. We did see a bounce off of that level in Thursday's trading session and then the continuation during Friday, closing near the highs of the session. So although we do have a long ways to go to make up any kind of losses, I think from a technical standpoint and from a gamma exposure standpoint, this is a very interesting development heading into this March 21st OPEX this coming Friday. We're definitely not out of the woods yet, as the gamma exposure data is still skewed to the downside, so we want to pay close attention heading into Monday and Tuesday's trading session to see if this gamma exposure data shifts. We do have real-time GEX data that updates every 30 seconds on our platform, and so that's something we're going to be watching very closely during Monday and Tuesday's trading sessions. Taking a look at the VIX, we did see a continued down move in the VIX. We closed at 2177 on Friday. The last 4 trading sessions have all seen lower lows on the VIX. This is something we highlighted on Wednesday after getting above our gamma exposure concentration. We highlight the 3 largest positive and negative gamma exposure concentrations. And when we saw this big move above that zone, this basically told us that we were looking a little stretched relative to the options chain on the VIX. Of course, price has since come down and we are now essentially right in the middle of this gamma exposure zone. Turning over to the Qs closed right below the 480 level. This is a very important level we've been watching over the last couple of weeks, 479.66, but a huge move on Friday, up 2.42%. Looks to be like a little double bottom when looking at the 30-minute chart. Our lower dealer cluster zone is basically between the 470 and 480 level. So I think if we can see a breakout above 480 either next week or the week after, this would be a substantial move, potentially a short-term bottoming signal as well. The only thing I don't like about the Qs currently is that the gamma exposure data is skewed very negative. As we can see, we've got negative gamma exposure going all the way down to the 450 strike and below. So this is just telling us that there are still market participants positioned in the options chain down to those strikes. Now, a lot of these contracts at these lower strikes will be likely rolling off on March 21st at the big monthly OPEX, in which case we could see a big flip higher up the options chain, especially if we can break out above this 480 level. So that's why we're basically tracking this level. I think it's a very big line in the sand for the Qs. Next, let's take a look at a few individual names, starting with Nvidia. Huge move on Friday, up 5.27%, closing above 121. And the move off of this 105 strike just a few trading sessions ago has been really, really impressive. We actually entered an out-of-the-money call debit spread on Nvidia here about a week and a half ago when Nvidia was trading around this 115 level. So we were definitely a little bit early, but we gave ourselves enough time that when the bounce came, we could likely catch at least part of it. And so this move, of course, has been a welcome move for our portfolio. We're still in the position, which, by the way, you can follow along with all the moves we're making in our community Discord, linked in the description below. One of the reasons we entered this out of the money call debit spread is because we were looking for an asymmetric risk reward strategy, basically very low risk with high reward outcome potential. And we saw all this gamma exposure concentrated between the 130 and the 140 strikes. And so that looked like a potential target heading into the end of March or maybe even April. So this move has been a great start so far. I don't know if we're going to reach all the way up into this zone, but anywhere above the 120 level, and I think we're looking pretty good on this position for this week. And so we'll continue to watch how the gamma exposure data progresses, as well as the option volume data. If you look from Friday's trading session, this options volume doesn't look like much, but it's actually 200,000 contracts at each of these strikes, the 130, 130 135 and the 140 strike. So huge volume coming in these out of the money contracts way up the options chain. So that's definitely something we're going to continue watching. And I think the potential for a continued move, especially if this market momentum continues, could be substantial heading into March and April. Next, let's take a look at Tesla. Tesla trading right below the big 250 level. This is a very important level in our opinion. It's the zero gamma exposure level for one thing. The other note that I would make is that 250 seems to be an important resistance level over the last week as well. Miniature cup and handle forming on the 30-minute chart. I think a breakout above 250 could see some momentum start building. We've been watching the gamma exposure data on Tesla over the last couple of weeks, and it is dispersed very wide, all the way from the 200 strike all the way up to the 400 strike. Huge dispersion in the options chain, which is causing a wide dispersion in the GEX data. Currently, that is skewed to the downside. Everything below 250 on an absolute basis is much larger than everything above the 250 level. So we're going to be watching this data closely to see if there is a shift higher up the options chain, especially following this March 21st OPEX. These are the kind of setups that we love to see. Deeply oversold moves with gamma exposure growing potentially at higher strikes, even if we only got to the 300 or 325 level for, let's say, a dead cat bounce. That would be a substantial move in terms of option strategy. And so we could potentially capture a large part of that move if we execute correctly. And that's going to be something that we're looking to add into our portfolio as well. Next, let's take a look at GLD gold trading at 275.24. We've played various option strategies on GLD a number of times over the last several months. The last most recent move we entered was a out of the money call debit spread again at around the 267 level. So we were a bit early. GLD did continue lower to around the 260 level before bouncing, but ever since then, it's been on a huge tear. Our target zone was between 270 and 280. So we actually had the 270 280 call debit spreads expiring March 21st. So we are coming up to that expiration. We're trading right in the middle of our target zone. So we'll probably look to lock in this position either Monday or Tuesday, especially if we're hanging around or above this 275 level. At that point, what I'd be looking for on GLD is a pullback potentially into this 272 level. You can see this is sort of the previous resistance level, so I wouldn't be surprised to see a retracement. To me, that would look like a decent re-entry point for a move, a continuation move, potentially up to this 280 level sometime in the April expiration, maybe the April 17th OPEX. We love including names like GLD in our portfolio as a diversifier because a lot of times you can get big moves that are contrary to what the market overall is doing, and we've seen that over the last 2 or 3 weeks. While the market has been selling off, GLD was actually bottoming and was giving us some decent profits in our portfolio during that time period. So hedges and diversifiers can be great additions to your portfolio, and we definitely like to use those type of strategies in our portfolio. And if you're interested in accessing our gamma exposure dashboard and our option flow analytics tools, as well as our algorithmic trading strategies, which we just recently rolled out, 3 unique algorithmic strategies with full backtest results, which you can go in and research and include in your own strategy or just add directly into your charts on our platform. All of that is accessible by going to geeksoffinance.com. You can sign up and become a member. We are offering a special promotion, $300 off our yearly portfolio manager tier subscription. Use code SPRING2025 at checkout. We have a few spots available, so definitely take advantage of that while you can. Members also get access to our community Discord. You can follow along with all the moves we're making in our options portfolio, as well as interact with a ton of great traders in our community. You definitely don't want to miss that. Link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.